Hi, everyone. Thanks for being here today with us. We hope you're doing well and welcome to our December Macro Break webinar, the place where we are sharing updates about the latest news in economics, finance, and investments. Today, our speaker, Jacques Lemoisson, the founder of Gate Advisory, will share his insights about December central bank's gifts for 2021. So only in a few minutes, we will learn more about global markets, asset allocations, and more. As you know, this webinar is hosted by Quantilia, the data management and analytics platform dedicated to wealth managers and institutional investors. So as usual, Jacques will speak during approximately 20-30 minutes. And during this time, you can post your questions through the system. So don't hesitate and we will answer them at the end. So thank you. Let's start. So Jacques, I leave it to you.
Thank you, Katarina. Hello, guys. I hope you are doing well. You are in December. Christmas is soon. Christmas means gifts, even there is a COVID. Now the central banks could play the Santa Claus role, but what we could expect in the coming days, on the coming weeks, the ECB has a meeting this week, on the ECB, on the Fed next week. Now you will see that there is more issues or concern or opportunities behind these two rendezvous. Of course, just a small talks about the global macro insight. All my subscribers are already aware about these points, definitely, because they have this daily view every day. We started to open subscriptions in December, it's starting very well, thanks to all the subscribers at this stage. Feel free to send me any questions about these subscriptions, about our macro daily. Now, back to the topic. December will be a good month, and thanks to central banks. Our subscribers know very well this lights. Okay, it is developed. These lights were developed by Quantilia on Gate Advisory, and definitely everything is green, except the liquidity risk rising up in orange. On the Quantamental environment, on the quant side, everything is fine. Perhaps some acceleration in financial risk, liquidity risk a little bit, but mainly everything is green. On obviously the months, the previous months was just a record high in terms of performance on everything in all asset classes, I should say. But what we are exactly in our market? Everything is green, but from the Bank for International Settlements, we can see that the proportion of systemically important countries with elevated vulnerabilities by sectors are rising up, even if for some sectors we are below the global financial crisis. Definitely in sovereign, in non-financial firms, we are above these limits. It's the gray part there. We are far away above. Okay, this kind of the risk level during the global financial crisis. Definitely also in aggregate non-financial corporate debt, record high also. This is a huge issue. In the ECB model, the model is becoming very alarming because in the forecast during 2020, all the ECB or the ABA or all the regulators just point out that the NPL in European banks roughly should be around 800 billion. Unfortunately, we should have 1.4 trillion euro in terms of non-performing loans in 2021. And of course, the wave of bankruptcy and I call the zombification of the economy just was postponed and absolutely not solved at all. And we will see in the coming slides what I'm talking about. And it just we have to keep this in mind, because this is the reality and this is the market, and we will see that this is we are kind of dichotomy in this environment. Of course, the economy recovery is very patchy. China is the big winner, and of course in the queue, I should say, you can see easily the European area, of course, on the LATAM. The US is the average. Russia, Turkey, Indonesia are doing well. South Korea, China, and China is a big winner. Okay, corporate profit for 2021. Blue sky scenario, like the quantitative model is showing us. Everything is fine. 2021, fantastic. 2022, not so bad. Okay, everything is fine in our beautiful world. Just a question, and it's honestly a question: why the insider are selling so much? Or they becoming all crazy, or something is cooking? Perhaps Joe Biden now, even if Trump is contesting what he wants, Joe Biden should be is elected, and he will be the next president of the United States. But definitely what insiders are saying, perhaps Biden will increase taxes on capital gains. It's one of the rumors. We will see, but it's strange that to see the insiders selling so much of their equities. Now, the ECB. Okay, as I point out in the first slide, there is no vulnerability in the corporate. If you put this score, the corporate insolvencies are smashing down due to plenty of arguments. The big plan voted by the Eurozone, the new plan, or perhaps already voted now or in the coming hours in the States. Who knows? But definitely, there is no risk of insolvency if we take into account only the figures from September, October, and November. Of course, these figures are not wrong. They are demonstrating that all the action of governments and central banks just postpone the issue. Nothing is solved. The Europe is weak, but not the euro, okay, thanks to central banks, I should say. And only further accommodative measures could lower the European currency, but now after it, what will be the magnitude, okay? And this is the big question for the next ECB meeting. Surely, I should say the ECB could extend the PEPP, but I'm not quite sure that it will increase it. The big question for my main remark is now I think the ECB will more focus about the quality of bonds or the quality of the asset purchased by the PEPP than or the duration mainly than the quantity. Okay, on this question of duration will be the same topic for the Fed. Okay, definitely perhaps the ECB could extend not the amount but the duration of its PEPP. The TLTRO is key for banks. Mainly, in the first slide, I point out the real issue of the NPL for European banks. In Europe, like in States, it's massive in States, but in Europe, now we can show in on the top left chart what is happening. We are in a tighter lending standard. Okay, definitely is less and less easier for companies or households to get some to borrow money. Okay, even if there are plenty of liquidities. Banks are tightening their standards. I would very surprised if, as I mentioned previously, the ECB is focused on the duration, should be focused on durations, on more duration than the quantity, but the quality too. And I think that mortgage loans should not be part of the PPP. Is not the case in the US, but in Europe, I don't think so. They will integrate that. And of course, in the TLTRO, as usual, some countries are reaching their maximum limit. Okay, mainly Belgium, some southern countries. Of course, Ireland, Finland, all the northern European countries are in better position. Not a surprise, but you can see on the top, on the bottom right slide. Now the Fed. Oh, you understand? Now the ECB should act, but I'm not quite sure that they will extend the magnitude of the PPP. On the mortgage loans should not be integrated in it. And now the Fed, it's for next week. I put the quote mentioned by Yellen. Honestly, in one sentence, she summarized everything. The American dream is close to be dead. Definitely now they need to revive it. Honestly, it's the same thing in Europe. It's sad to see, I have two sons, it's sad to see that perhaps their dream are not bigger than mine. Honestly, it's perhaps the first generation to live with that. It's not acceptable. On my side, it's not acceptable. But I think that Janet Yellen just pointed out the right challenge for the Fed, for the Biden government, for the US Treasury. In US, the situation of the COVID is just catastrophic. Okay. JP Morgan and Goldman Sachs, but all the investment banks are super bullish for 2021. Okay, there is plenty of reasons, and I pointed out these reasons during our previous webinar. Central banks are there, fiscal plans are there. Okay, everything is fine, but there is a lack of confidence, not only on the vaccines, but also on the consumptions. Definitely, the quantitative credit card data points that there is a drop of -20% during Black Friday. Okay, that's a good sign. Bloomberg estimates that 76 million of Americans believe that some of their very inner cycle of people could have issue in terms of earning during the coming weeks, not the coming months, coming weeks. This is not good for the consumptions, mainly at the end of the year is quite an important month for plenty of retailers. Even if Amazon will do well. After, one of the main topics behind that is the age of the captain. Okay, it's the huge shock in terms of generation. Okay, in demography, it's we need to assess that. Okay, we will have a huge switch from the baby boomers to the millennials in terms of wealth. It's a key topic for all the asset managers, all the wealth managers. We could discuss more about that in other webinars, but trust me, it will be a huge issue. And we will see. Perhaps we will switch to MMT. Honestly, I pray that we never see that, but who knows? And definitely the COVID plans, the demography only accelerate the funding gaps in social security and pension schemes. And of course, the decision of central banks has to keep this in mind too. There is some new correlation, I should say. Okay, the S&P 500 is expecting further Fed's balance sheet expansion. Okay, there is a clear correlation between the Fed balance sheets and the S&P. Now the S&P is skyrocketing, is waiting more juice. Now, like the ECB, I'm not quite sure that the FOMC will be really in the game, I should say, in December. Okay. We could expect more forward guidance, longer duration, okay, the lengthening of the duration in QE program, like the ECB, okay, on implementation of a twist. I think that this is a key metric, and that's why this chart is very important, because the S&P is overplaying or is anticipating a huge increase of the Fed balance sheet. But I think that the Fed could announce a twist. Meaning a twist is you buy a long maturity, you short maturity, and like that your balance sheets stay the same. You need to understand that in 2020, on the readers of our Global Macro Insight just saw that this morning, 21% of the entire US dollar printed was during 2021. Of course, the value of the dollar I have on my screen is down -8% year to date versus euro, for example. But honestly, it's nothing if you bear in mind that 21% of the entire dollar printed was during 2020. Okay, and now I think that the Fed know perfectly well that it could be an issue in this environment if they announce a huge implosion of a huge increase of the QE, and that's why I think the twist could be, and the twist is kind of yield curve control on the YCC. I think that it could be smart to do that through a twist. Okay. Of course, I think in December, the ECB and the Fed could let the door open for further action in January. But I think that the both could be on the same page. Now I drop the conclusions. Some conclusions will not be short. Okay, the markets, okay, cross assets have already priced everything. Okay, election of Biden, tick the box. The vaccine announcement, tick the box. Support from the Fed or central banks, we will have support. I think that we could have some disappointment about the inflation of the balance sheet. Okay, but I think that it could be interesting for the longer durations. And you will see that it's will be a key topic for central banks. On the announcements of future government fiscal plans, tick the box. Okay, everything's are in price. I think that the most important chart for 2021 in asset allocations is this one. It's a kind of the collision course or the juncture between the bonds and the equities. Okay, for plenty of reasons. I will explain this, and I will try to dig deeply in my 2021 strategy. I think that we could have a huge rotation from bonds into equity, and I think we have to keep in mind. Now, the big question is: this rotation will start right now, or we will have a big reset before to achieve this rotation. I will address this in the 2021 in all the next global macro insights. US dollar for me is the main stuff to track, mainly to try to assess what will do the central banks. Now 1.2135 are challenged by the euro dollar, meaning that guys in forex are playing a big announcement from the Fed. Okay, we will see, but the net positioning is massively short. Okay, from everyone, meaning from leverage funds, asset manager, on everyone short dollar. I think that we could have the reverse in this short positioning if the Fed just announce just longer duration, but not a huge increase in this balance sheet of the balance sheet. Conditionality is key to understand the issues. The what if, okay? What if central banks pass that turn in December? I'm pointing out this is not that they will do nothing. Of course, they will do something, but perhaps the magnitude could disappoint some guys. After it's all the plan on announced economic plans did not arrive on the time of political reasons. Of course, they will arrive, but after is like the central banks. I am concerned about the magnitude of their of the increase of balance sheet. I have the same on. This is not a same concern. It's a reality. We have an issue in terms of size of the economic plans. The 1.35 trillion euro of European plans are just stuck by Poland and Hungary. Perhaps this week we have European meeting. We could have a 750 billion plan. Okay, you divide by 2 the plan voted by the Eurozone. It's the same for the US. Democrats voted already in the first part of the year 2 trillion plan, or perhaps a 3 trillion plan. We will have a 908 billion plan. It's good, but it's not a 2 trillion. Okay. The vaccine, I think it's the main topic. Vaccine, we will have vaccine. The issue is the audience. Okay, it's first we start to have some issue in the production. Okay, we will have issue in the distribution, and we will have issue in terms of acceptation. Okay, geopolitical conditions. What if? Taiwan is always an issue. Hong Kong is an issue too. Trump is eating China by plenty of tricks to try to make more nervous China. At this stage, there is no retaliation, but who knows? I think that to conclude, at this stage, stay barbell. Okay, central banks are there. Till we have got the confirmations that they are just watering a little bit their message. We are paid to take risk, but we need to be barbell, meaning that we have to buy VIX in the same time. It's the same thing in bonds, it's the same thing in commodities, in everywhere. Our global tactical opportunities, the GTO, is what I'm writing every day on, and synthesize this in this portfolio since 2012. The performance year to date is plus 23%, mainly due to this barbell allocation. Okay, is only in ETFs, but it's working well. And I have all details for our subscribers know very well this thematic on this, they are already aware about the performances on what I'm putting in. I think that it's the main message. Okay, to synthesize, central banks will act. We have plenty of liquidity in the market, but I'm not quite sure that magnitude will be the same that forecasted by the market. We could have a very difficult January. Okay, January will be very tough because, of course, if the central banks are there but not with the same magnitude, what we could expect with the market at skyrocketing, of course, we could have this rotation, or we will have this rotation. But what will be the magnitude of the drop of the 10-year treasuries? That's why I think that the twist will be announced by the Fed, because if they don't put a control on the 10-year yield, we could have a problem in the 10 years. The GTO is short 10 years. Why? Because now we have a strange correlation in mutual funds. The mutual funds now are carrying a huge amount of treasuries. They use treasuries to adapt their liquidities. And if there is a huge drop in value in corporate bonds, they have to sell the treasuries to just be net cash positive, I should say, and it's on daily basis. It's a new, on this kind of new correlation between the drop of the corporate and the drop of treasuries is new, and we already saw that in the first quarter this year. The new also correlation now with the treasuries is due to the quant funds on the flow, the momentum driven strategies. The guys, the flow, all the strategy following all the trend. Okay, the trend followers. Sorry. Okay, and the trend followers are plenty also of treasuries. Okay, and if there are any issue, kind of a flash sell-off, we could have also a huge sell-off in treasuries. That's why I think the Fed will be more focused on twist than anything else. Of course, if the vaccine takes time, if we have the wave of bankruptcy and so on, we could have an issue definitely in January. January could concentrate this kind of risk on a potential reset. And after, of course, the big rotation will come there, recovery will be there, and so on. But I have very nasty figures about layoffs, about bankruptcy beginning of January. And I think the market at this level, there is no room for any disappointment. And I'm very afraid about that. That's why, okay, we are paid to take risks. Okay, fine, we take risks. I can be long equities. Definitely with a weak dollar, we can be long emerging. We can be long some US stocks, mainly on Chinese stocks too. But we are long VIX too. We could be long gold, but I will be short oil, because to be long short at this level, I think is crazy. And I don't mention the OPEC Plus, but we can talk about if you have some question about that. I finish there. Sorry to be 30 minutes. Okay.
Yes, it's perfect. Perfect time. Thank you, Jacques. So, dear participants, it's up to you. Now you can ask all your questions you have. So you can post them through our system. Both you can use the chat. I've just written down some messages. Or you can ask your questions anonymously. To start, actually, I have one little question. We really love to have some predictions. So, Jacques, what is your prediction about the hot topics in the next year?
For me, the two big topics will be three topics. First will be the assessment, the real assessment of the COVID by the government. Definitely, it's already a mess. It was a mess during 2020. I pray that we will not solve it, but we learn, or we have efficient process to live with the COVID. Okay, to stop these containments on you stop the containments. We back to the containments and so on and so on. It's this kind of wave of regulation on unregulation. It's nasty for the economy. The second topic will be the great rotations. This huge amount of liquidity will be the major catalyst for the rotation in favor of the equities. On the third topic, there is others, but the third main topic will be the inflation. I think that it was one of my best topics in 2020. I already integrated that in the global tactical opportunities through break-even. It was well, not fantastic, but it was not bad. And I think that the inflation will be a key topic. I will try to address this in the webinar in January.
Yes, I think we will discuss about our next topic very soon. Actually, I think this topic it was very interesting and important to end our year. And I've just received one question.
Yeah.
Hello, Jacques. How do you integrate the fact that the deterioration of the US deficit, which should push interest rate upward to reprice the risk, and the weakened dollar? How do you think FED will act, and which part of the equation it will try to save? Keep rates lower or currency highs?
Yes. Yeah.
Thank you.
Yes, thank you. It's a good question. It's just to summarize the question. It's if we will have an issue due to the huge amount of US deficits in the dollar, and it could push interest upward. I think it could happen, definitely. You know, it's one of the part of the price of the inflation. Okay, I don't want to dig more this because I want to keep this for my 2021 strategy. But honestly, mainly 30% of the goods of manufacturing goods are produced by China. The yuan is plus 6%. Okay, if someone thinks that is not inflationary, okay, fine. After we have the weaker dollar, meaning a higher price of raw materials. Okay, if it's not inflationary, okay. After we have an issue about the US deficits. Definitely, definitely, they could push higher the interest rate. Okay, on the dollar, we can. That's why the question is, the Fed will act on which part of the equation. I think that this is why I mentioned that the Fed will not act in his balance sheet. They will try to keep the balance sheet as it is on. Honestly, when you are seeing the chart, I just back to the chart there. I think that it's just the chart is just crazy. Okay, I think that now we are in this situation. I think that the Fed will act on the durations. Like that, they will try to control the longer duration, and try to control the 10-year to 30-year part of its curve. On the other side, they will try to communicate about new plan to help with the Treasury, with Janet Yellen for the small business. Okay, I think that they could act in this way more than to increase the balance sheet.
Okay.
Question?
Yes, yes.
Okay. How do you use gold in your asset allocation? What do you recommend in general in precious metal sector? Usually in my asset allocation, I use ETFs. Okay, I know it's not perfect because honestly, I prefer bars. Okay, the real gold, and I think it's the best way to play this. Gold miners are also a good vehicles to play this kind of bet. Very volatile, but I think that gold miners, the gold ETF on the real gold, I should say. I think that this kind of I have many in I think in balance asset allocation we could go to 20% of gold. Okay, my GTO is more balanced because I have Bitcoin and so on and so on. In other precious metal, I love silver. Massively more volatile, but I think that it will play well. Also, I love also palladium. Okay, I think that there is other precious metal that these metals are components of batteries. I think it's very it's use fashion to talk about that, but honestly they are complicated to purchase on. There is no very liquid vehicles about that. For me the key stuff is to play liquid vehicles. Okay, and I think that's why sometimes I prefer to buy an ETF on precious metal index. Like that, I have everything. I want to have some bad surprise, mainly with the Contango on the backward effect on the futures curve, in some illiquid, I should say, precious metals, gold, silver, or palladium.
Thank you, Jacques. I think that you have answered the question. And thank you very much, dear participants, for your questions. So just the last check, whether you have any questions to our speaker, Jacques Lemoisson, today.
No question about the inflation, no question. Deflation, I know this is tricky because we are in deflationary world. Honestly, I know that it will be we will pay a huge attention to explain why I am very concerned about the inflation. And maybe we will see what happened at the beginning of next year with the new government of Joe Biden. The geopolitical relation between China and the USA will be key for the inflation perspective. I think that we need to pay attention also about the disruption of the supply chain, on all the consequences regarding the PPI and CPIs. Even if, like as mentioned plenty of times, CPIs and PPIs are not very well calculated. Obviously, for good reasons, if we think like central banks need to have reasons to keep their dovish momentum. But trust me, the inflation is there. They are not computing well. And I think that one day the New Zealand Central Bank is starting to think about incorporating the real weight of the real estate price in this basket of inflation stuff. We will see, but trust me, this will be a big topic. With the capability of the economy to digest the wall of the bankruptcy and layoffs. This is happening for January. During this time, stay normal.
Okay, so thank you, Jacques. I think for today, everything is fine. No questions for today. So thank you very much for being here today with us. We'll keep you informed for our next webinar through our social media of Quantilia and Gate Advisory or through our newsletters. So keep tuned. We wish you all the best. Happy Christmas holidays, and the most important, keep safe and sound. Thank you very much.
I'm sorry, we will share the link to the webinar if you want to share it in the coming days.
Yes, it will be published soon in our social media, so keep tuned.
Cool.
Thank you very much. Thank you, Jacques.
Bye.
Thank you. Bye-bye.